Well, hey guys, how y'all doing today? I'm Bryan, the PhiloMath Investor. Today's video is going to be about my favorite four stocks to hold for the long term. But before we get started, I do have to give a disclosure. I am not a financial advisor. Everything I put out is for educational and informational purposes only. For any financial advice, please consult your financial advisor. All right, guys? Don't need nobody getting mad at me or trying to sue me because you didn't do what you were supposed to do. But now that we got that out the way, let's go ahead and get started. One out of the four stocks that I love I just love uh to hold for the long term is Square. I already have it chart up. We're looking at a 3 year weekly chart. So basically, we're looking back 3 years, and each bar represents a week. And I just want you to take a look at it, guys. Um, I mean, it sure doesn't look too good. I mean, right here, but when you look at how it's been performing, back 3 years ago, I mean, it's been moving up. If you don't know what Square is, it's a financial service company. It's a technology company that focuses on financial services. It's great. It's really easy to use. A lot of small businesses are using it. Their small business customer base is growing. They also own Cash App. You know what Cash App is. A lot of people are using, especially the younger people. But it's just so easy to use. Very easy to exchange money, pay somebody you owe. I mean, it's just great. Their technology is really useful. Their services is great. Um, but yeah, I mean, just look at it, guys, and if this is your first time looking at Sharp, basically the green bars mean that it's going up. Red means that it's going down. Pretty easy, guys. My 7 year old been knowing how to read, stock charts since he was 5 years old. Pretty easy, pretty straight to the point. Nothing too complicated. But anyways, guys, I mean, its stock's been performing well since the IPO. Um, I mean, I know that over here you see all these red candles. This was during the November and December sell off from the big institutions. Of course, when those big guys start selling, everybody just follows along, because everybody starts panicking. They're just like, it's time to sell. And really, guys, just to let you in a secret, I'm pretty sure they already knew what was to come, in the months ahead. Because, I really thought by January we were going to bounce back just because it's a known fact that, institutions, once they start selling, they start buying back uh, their shares on a cheaper end, or they sell off in the end of every year for tax purposes, to pay less taxes or whatever they doing, but they do it at the end of the year just to go ahead and get ready for their tax season coming up. But let's go ahead and look at a monthly chart since it's a bit easier to look at it in a month basis. But anyways, as you can see, that was November right here. That was December right here. Like I said, I thought we would have bounced back. We kind of did. We failed. We bounced back, but uh, pretty much we're on the downside. And right here, guys, we just continue to sell off due to first the Feds announced that they were gonna have to what's it called, do a interest rate hike, which we saw it coming. We just didn't see it coming. That announcement so soon. I thought they would at least waited till February, waited a month before, but they went ahead and announced it, which really I see. Well, now we see why. I mean, things were just getting out of hand, especially inflation. Inflation is to the roof. I mean, it's the highest it's ever been since 1982. Um, and it's not getting any better. On top of that, we had the Ukraine. We have the Ukraine and Russia situation. And that also led to the surge in oil and gas. Right now, gas is nationwide. It's at $4 and up, which is terrible. The last time it was that high, nationwide was in 2008. And I mean, if you don't remember what happened in 2008, you should probably look back and just look at what happened, because that'll give us a clear view of what could happen in the future. You see what I'm saying? And that could better prepare you on your decision making. But anyways, guys, yeah, that's just my one out of the four stocks that I love for the long term. I mean, it's been performing awfully well. It didn't fall because of any fundamentals of the company. Nothing was going on, nothing going wrong with the company. Earnings weren't bad. Actually, they reported 2 weeks ago, I believe. Yeah, it was about 2 weeks ago. I don't remember, a week and a half ago. But anyways, guys, they beat earnings, so let's go ahead and take a quick look on that, just so you can get an idea. Um, Here's the shareholder letter that we all receive as shareholders. People who own share stocks of the company. So you can better understand me. And look, let's just look at some quick highlights. In the fourth quarter of 2021, they generated gross profits of 1.18 billion, up 47% year over year. Wow, that is great. That means they're up year over year 47%. I mean, that just shows you their growth. As far as profit making. What else? Cash App generated gross profit of 518 million, up 37% year over year. Our Square ecosystem generated gross profit of 657 million, up 54 year over year. So I mean, they're clearly showing you that their margins is growing. It's just showing their growth as far as profit wise. They're just expanding, man. That's why I love it, man. And really, if you use their products, you'll also understand why their services are great. Their platform, their software. I mean, they just make it very easy for you to get things done. What else? Cash Card has reached significant scale. There were more than 13 million Cash Card monthly actives in December, which represented more than 30% of our 44 million monthly transacting active base. So that's basically telling us that more people are using their card. When you download Cash Card, I mean not Cash Card, Cash App, and make an account with them, they will send you a card, and basically they just they're seeing a a rise of people using their cash card actively, which is a really good sign. That just letting you know that a lot of people are adopting to their to their business, which is really really good. What else? Our sellers have adopted more of Square's ecosystem over time, which has helped them grow. That's awesome. Like I said, a lot of people are starting to adapt to the company. Their company's growing. People are adapting to it. They're finding used to it. They're feeling like Square's helping them their business grow, which I do believe too. Because if you run a small business or you're self-employed, you use Square, you'll see how easy it is. It just makes it easier as far as the transacting, scheduling. They just offer a wide range of things that they can help you expand, as a business. Yeah, 38 to 2021 and 2021, 38% of Square's gross profit came from sellers using four or more products, compared to 10% in 2016. So from 2016 to 2021, uh, that's awesome. That's awesome growth. That means every year since 2016, more and more people have been becoming more keen to using uh their products, which is really really great. And this is just a quick look. Let's just go ahead and chop it up. But one final thing, let's just look at their financial matrix. This from 2017. This goes back all the way to 2017 to 2021. That just shows their growth. Their growth, man. I mean, that's just wow. Look at that. Steady up. right? And that's from gross profit. They just been increasing. Here too, their loss been falling. Of course, they're when a company first comes out or they're awfully fresh. I mean, it's perfectly normal for them to be in a loss because they have to invest to make money. That's just how it goes when you first open a business and you gotta expand or grow. You have to invest in more things so you can become greater and grow more. You know, but that's just showing you that the loss is decreasing. Well, it's they weren't on a loss here. They're awfully falling, but like I said, they just invested more. And actually, that I didn't disclose this, but they're also working on a new company which was gonna focus on Bitcoin mining, which is really great. On top of that, they're making their own Bitcoin mining chip. In order for you to mine Bitcoin, you need a certain kind of chip, and they're making one that's more energy efficient and less costly, which is really good because I mean, if you didn't know, in order to mine Bitcoin, you need a chip, and that sort of chip is really expensive to get. So they're working on that stuff. So I mean, it's pretty much we're expecting to see a little decrease in net income just because of them investing on this technology. But yeah, man. I mean, that just gives you a quick glimpse of how they perform and how they're doing as a business, and that's why I love it, man. I mean, I'm invested in it, and I just love it, and that's just my first. That's one out of the four stocks I want to hold for a long term, guys. And I didn't say this, I forgot, but man, if you don't have a pen and paper to write this thing down, make sure you do. Make sure you use rewind the video and take some notes. I actually look. I forgot to take my price target. This ain't really my price targets. This is just a notification to see if it goes back to 101.71 because over here when it was dropping, it dropped all the way to 82, but once they had earnings, man, it shot up all the way to 131. So if you bought at 82, you're looking like at almost a 40% return on your money. I mean, that just shows you. I mean, because everybody saw that it was in a bargain, especially institutions. They're like, man, it's awfully cheap with what they have to offer. I mean, it's a great company. There's no reason why it should be trading that low. So they bought it. Of course, it went back down because of that Russia and Ukraine. But once all that stuff gets resolved, man, I'm seeing it get back to 289. That's its high. That's as high as it's been to $289 with 23 cents. I see it shooting up. I say in 2 to 3 years we should get back up there just because of what's going on and what the rise of interest rates. I mean, it is gonna take a minute, but I mean it's gonna be worthwhile. I don't know what other asset is gonna give you a good return, or as opposed to having it in the bank, just having it sitting there. But anyways, guys, that was the first one, Square, and now let's go to my second one. My second favorite stock to own is Microsoft, and I mean just look at it short. Very different from Square. I mean they being and they've IPO. They've been in the business way longer than Square. Uh, and I mean look, what's the direction it's been heading ever since it IPO'd or it became public to trade right here. Up. Look, 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 look. Yeah, man, Microsoft is just a beast, man. Look, I just love it. I love Microsoft. Like, man, they're. I mean, I know. I'm sure everybody's heard of Microsoft. I mean, Microsoft. It makes computers, software. It has the Office. The PowerPoint, Excel. Everybody uses that. I forgot. I know it's Office. I forgot if it's called Open Office. I don't know, but y'all know what I'm saying. It's where you could do all your do your PowerPoints, keep accounts, your your receipts. You know, if you're an accountant, you can use Excel even for stock trading or for investing in stocks. Word, so you can write your letters. They also have Xbox. They're in the cloud business. They have a lot of government contracts. I mean, I can go on and on and on. I mean, they just been in the business so long, and they just been performing so great, man. Look at this. Look at that. Up. You know, right, there's two red candles right now just because, like I said, the same thing was going on in the world. But I mean, just look at that. Look at its performance ever since. And you know, the high it's been is its high is $349 with 67 cents. And I mean, they're just phenomenal. Honestly, guys. Like, oh my God. They're just great. Let's take a quick look at their uh they reported earnings as well. Let's take a quick look. Just to show you how great they are as a business, man. I mean, let's see here. Is it this one? Hold on, guys. I'm trying to do something really quick. All right, it wasn't this one. Let me go ahead and exit this out. It's this one. I just need to do some quick highlights, you know, so we don't take too long. But anyways, yeah. Let's go ahead and look. This is their financial summary, their growth. You know, look, revenue, $51.7 billion, up 20% from their last quarter. Their last quarter, you hear that? Not from a year over year. Last quarter. 34.8 gross margin, net income. Look, just plain growth. Just take a quick look at it. Look, phenomenal, man. And like I said, look, their intelligent cloud system. That they're just expanding as a business, and they're just great, man. They're one of the they're top five. They're one of the top five companies to invest in as a whole, or really just top two. I'm gonna tell you the second best company, but I mean, look at this. Look at its growth ever since from 2021 quarter second all the way to over here. Look, look. And this year over year, 32%. Year over year, 37%. Like, look at their growth. Look at that. Their cloud revenue, which is it's giving them a lot of revenue. Like I said, they're expanding. We're have entered the technological age where everything's technology, AI, everything's just run by technology, and you need cybersecurity is increasing, and I mean it's just like they said, it's gonna be $1 trillion industry, and I mean just look at their cloud revenue, how it's been growing. It went from 16.7, 17.7, and this is just quarters. Look at that, steadily growing, man, and that just shows you. Look, commercial bookings grew 32% year over year. Right here, like, oh my God, man. This is just a great company. Phenomenal. Cash flow from operations was 14.5 billion, up 16% year over year. Their free cash flow was 8.6 billion, up 3% year over year. I mean, they're well equipped, you know. And I didn't really go over it with Square, but they're pretty much the same. They're positioned well, and that's the kind of companies that I love to invest, knowing that they have money um, for emergencies. They have money, you know, in hand in case of things just hit the fan. You know, if the economy goes to shit, I know they can hold it off. You know, even with this Ukraine and Russia situation, if we enter World War III, I know they have what it takes to weather the storm. And yeah, I mean, this is just, you know, I mean, I'm not gonna go over all of it, but it's just phenomenal. It's performance. It's just great. I love Microsoft. I love it. I love it. I mean, you can look how it's been performing ever since. Like, look at that. Look at that. Imagine if you could invested right here. When was this? 2013, January 2013. And let's say, we're just gonna do it here. You're looking at a 927% on your money. So for every $100 you put in there, what is it? I'm trying to think. What the heck? Sorry guys, I'm not good with percentage and all that to do it on top of my head. But uh let's say 900 times 9.49% equal. Yeah, for every $100 bill you would have made a $900. So just imagine that. Just imagine that. And that just shows you the how you say how do you say it the benefits of investing in the stock market. I mean, look, man, your money in the bank ain't gonna do nothing. You ain't getting nothing for your money having it sitting in the bank. And this the kind of results you get from investing in great companies. And I mean, man, they're just great, man. So that's my second stock to hold for the long term. And let's go ahead and keep going, guys. I ain't trying to take too long on this. Nah. Third one is Apple. Apple, man. I hold Apple and Microsoft one and one. I mean, they focus on two different things, but they're both great companies. And the same for Apple. Look at its growth. Look, bam, steadily in an uprise. Minus this three candles, like I said, just because of what's going on. But other than that, just look how it's been performing. It's been performing fantastic, guys. I mean, look, the chart says it itself, and I mean, let's go ahead and go to its the same thing. Let's look at its uh when they reported. All right, let's look quick. Business highlights. This is what we want. This year over year. So they're up 33% year over year from net sales. Wow. You see its growth? Look from 19 to 20. Bah, bah, and boom. The pandemic really helped them generate a lot of money. Uh, they're gonna continue to grow. I mean, you know what Apple is. Everybody has an iPhone. Well, not everybody, but for the most part, a lot of people have the iPhone, iPads, MacBook, the what's that called? The the headphones, the wireless headphones, the iWatch. I mean, dude, they're a moat. Like like every for the most part, every person that owns an iPhone or Apple product, you just continue to get it. A lot of people every time, they just change phones every year. Once a new phone comes out, they change it every year. Like everybody has just become so adaptive to their products, man. It has just become a cult. And they're not gonna go nowhere. Just look at this. Their operating income, look, 64% up year over year. Look at this. Their geographic segments, how they've been growing country to country. They're up from America to Europe, Greater China, Japan. Look at their sales from their iPhone. Up 39% year over year. Mac 23%. iPad 34%. Wearable home and accessories 25%. Services 27%. Just look. Yeah, and they were the first company that hit $2 trillion market capitalization. Um just look at that. $2 trillion. I mean, yeah, they're a great company, basically, man. Yeah, man. They're just great. I mean, that just pretty much sums it up, how great it is. Like I said, guys, I'm not trying to go too much in deep. I'm just trying to show you the some highlights, some quick screenshots of why they're great. And I mean, look, they're just not to be messed around. And I mean, there's no other phone that can compete with Apple as far as when it comes to phones, to its accessories, from the iWatch, the iPad, and on top of that, people have just become so adoptive to their products, man. Everybody loves it. I love it. I really thought I would never get an iPhone again. Whenever I put mine away a while ago, but I just missed it. It just You just become so used to it and so easy. But yeah, man, look, it's high. It's been up to $182.94. Right now it's at 163. Not a big drop. So Microsoft and Apple, they're phenomenal companies. Compared to Square, yeah, Square has a bigger drop, but just because they're steadily growing, and I mean they just got a lot of things still coming out that they haven't announced yet. But yeah, that's just so that'll do it for the third one. Let's go ahead and try to wrap it up real quick on the last stock, and it'll be Disney. Disney, man. I love Disney. I love Disney as well, man. I just like what they're doing. As a kid, it was always my dream to go to Disneyland or Disney World. I went 4 years ago. We're probably gonna go again this year with my family. But yeah, man, overall they're just a great company. I like what they doing as far as their parks, their movies, and now Disney Plus. They on top of Disney Plus, they're co-owners of Hulu, and they got the rights of ESPN Plus. Man, I mean, they're 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 gonna be a problem for Netflix without a doubt. They already are. I know Netflix reported. I don't know if it was a couple weeks ago or a month ago, but yeah, they showed a slow growth of users. They're losing customers, and they're also spending a lot of money trying to attract customers. You know what I mean? And one thing that Disney has on top of Netflix is all the movies they've produced over the years. I mean, in my childhood, there was all these movies and for girls, for boys and girls, the all the Aladdin movies, the Cinderella, Little Mermaid, Mickey Mouse, bro. I mean, they got it's just their platform is basically a childhood nostalgia. It takes you back to your childhood, and dude, they just got it going on. They bought the rights of Marvel. They're making all Marvel movies. The Avengers, Spider Man. They're coming out with the new shows, series. Also Star Wars. I mean, dude, they're a problem, and I know they're gonna be the top streaming service in the years to come, if not a couple months, because they're just steadily growing, man. And I love them. I really love them. And if you look at their performance, the chart will tell you. Look, ever since here, they've been the lowest they were was from 10 years ago. Disney's been alone, been out for a while. But all the way from this low, from what we're looking at, 10 years. Yeah, 10 years. It's $40.88, and it's at 140. So it's up $100, and I mean, yeah, its performance has been choppy, but all in all, I mean, it's up. It's steadily moving up. It's still got a lot of room to grow, and I mean, it's just I love Disney, man. And let's go ahead and just take a look at its earnings. Let me see. Let's look at its quick view, overall view. Revenue increased 3%. To 67.4 from 65.3 million prior year, so it's up 3%. Let me see what else. What else? What was I trying to show y'all? Okay, there's not really that much as far as numbers on here, but this is what I want to show y'all. And I went back and look at it, and they're 100% correct. The company's 10-year total shareholder return outperformed the S&P 500 by 192% points. That's awesome. So basically, they're telling you that they outperformed the S&P 500. It's a known belief or fact. You can say some people do believe that you can't outperform the S&P 500. Honestly, after you know, doing a lot of studying, doing a lot of research, I've came to the conclusion and believe that yes, you can outperform the S&P 500, but you've got to put in the work. It's not just a walk to the park. Like, oh, okay, yeah, I'm gonna just buy this and that. No, there's a trick to it, which I'm not gonna reveal just yet, but it's really really possible for you to outperform the S&P 500. But anyways, I mean that was a pretty cool fact. I went back myself to look at the chart if it was true, and it was 100% true. Um, so I mean that just shows you how the growth of Disney. I mean they did get affected by COVID as well, so they did their growth did slow a bit. But I love that transition. Their parks closed, their cruise lines closed, their movie production had to pause for a bit because of the COVID. Uh, and I just like that counterattack. Bringing up Disney Plus, I thought that was just amazing, man. And ever since they came out with it, they just been in a steady rise. You can take a look at this chart right here. Um, and look, they just been moving up. So yeah, man, I love it. I love it. Let me see if there's something else. Yeah, let me go ahead and show y'all this right here. Yeah, this is the numbers. So there what is this? The following table presents additional information about our Disney Plus, ESPN Plus, and Hulu direct to consumer product offering. So this is basically showing you their subscribers, and from Disney Plus, from domestic, from the US and Canada, they're up 18% on their subscribers, which when they reported earnings, that was one of the key highlights because it's just showing that their streaming services platform is growing. Then that's really awesome. That's really great. So while Netflix was decreasing, Disney's was increasing. That's why I believe, and I'm pretty sure that Disney's gonna surpass Netflix. I think they're gonna be dominant in the space, and they're gonna overtake Netflix for sure, like without a doubt. On top of that, this is international, excluding Disney Plus and Hotstar. They're up 40%. Um, what else? Disney Plus. Okay, right here. Just I want to focus on Disney Plus. From 2021, they had 94.9 million subscribers. In 2022, January 1st, they have recorded 129.8 subscribers. That's 37% increase. That's great. That's freaking awesome. So that's why I'm saying, guys. I mean, they're steadily expanding. Their Disney Plus. I mean, not Disney Plus. So their ESPN Plus subscribers went from 12.1 in 2021 to 21.3 in 2022. 76% over a year, almost 100%. They almost doubled it, and that's why just Disney to me is just a badass company. If there's any kids listening, excuse my French, but nah, that's just how I talk. But anyways, yeah, man, they're a badass company. They're steadily growing. Um, and yeah, their Hulu as well. It went from 39.4 to 45.3, up 15% over a year. And man, that's why I love Disney, man. They have a lot of room to grow, and I know their streaming service is just gonna take off. They're gonna take off for sure. They got already a huge market share from kids to adults. Like I said, I'm 25. So if you go I mean that just takes me back to my childhood. I still enjoy the old Disney movies. And I enjoy their new stuff coming out as well. What from Star Wars series and all that stuff. And yeah, actually a subscriber. So why would I not buy invest in a company when I'm a consumer with the product. So if I'm consuming someone's products, I'm gonna make sure I'm an investor so I can capitalize on the gains as well. I can't just be a consumer. You don't just want to be a consumer to everything. You want to also be a producer. I'm producing more money. I'm bringing more value to my money. So that's my ideology when it comes to this. But but yes, guys, that's my four favorite stocks to hold for the long term, guys. And when I say long term, I'm talking 10 years. Like you said, like you heard of, Disney has outperformed. Actually, guys, I have the facts right here. I read it all the way down. Hold up. I'm about to tell you. I'm about to share with y'all something very interesting. So and this is looking at a 10-year return. So I compare Apple performance with the S&P 500 in the last 10 years, and Apple has made a return of 775% in the last 10 years. So if you would have invested in Apple 10 years ago, you would have got a return of 775%. The S&P 500 returned a total of 243%. So Apple outperformed the S&P 500 by 432%. So there's your further proof that yes, you can outperform the S&P 500. So that's Apple. Next, Microsoft. Microsoft gave you a return in a 10-year period of 1,030%. 1,030%. The S&P 500, the same thing, gave 243%. So Microsoft outperformed the S&P 500 by 787%. There's your further proof that you can outperform the S&P 500. Now Square I can't do 10 years because they didn't IPO'd until 2016. Let me make sure I'm right, but I'm sure it was 2016. Yep, 2015. Okay, so I could only go 6 years behind, but even that, from since they IPO 6 years ago, they've gave you a return of 1,252%. Once again, the S&P 500 in a 10-year time span only gave you a 243% return. So Square outperformed the S&P 500 by 1,009%. That's three. Come on, guys. That's three. Now let's go on the fourth one. Disney. Disney in a 10-year period would have gave you a 273%. Once again, the S&P 500 only gave you a 243% return. So Disney outperformed the S&P 500 by 30%. So yes, Disney didn't give you a greater return because technology companies. That's why they're called growth stocks. They're steadily growing. Technology is just expanding as well. We're becoming more adaptive to technology. Like I said, we're in the technological age. Uh, but yeah, but other than that, I mean, the main point I'm trying to say, yes, you can outperform the S&P 500. What does it take? You know what? I'm gonna go ahead and reveal it to you. It takes investing in great companies like the ones I just mentioned, and two, getting in good price entry. What do I mean by that? Buying the companies at good prices. Don't buy high. Like right here, you can steady see. Hold on, guys. Okay, so you can see right here in Square. Even though it's a great company, I wouldn't have bought right here. So imagine all the people who bought at $289 when it was at high, or right here, $267. I'm gonna tell you what happened. It's still a great company, don't get me wrong, but look, we're right here. They're down roughly 60%. What do you think those people did? I mean, if they're really, if they did their fundamental work and they believe in the company and they see what I see, I mean, not see what I see, not only see what I see, but actually read what I read. You know, that you don't just have to see to believe. You gotta also read and make sure that everything that all the fundamentals are actually true about the company. You just can't say, "Oh, this company is great because it went up this much." Just like AMC and GameStop, the only reason they went up is because of QE. You know, if you don't know what that is, that'll probably be for another video. But that's it. It didn't go up because their business is expanding or growing. You understand what I'm saying? Square is, but again, more than likely, a lot of people sold. They panicked. So they saw this down. They're like, "Oh, okay, don't worry, it's gonna go up." It did go up. Next thing you know, we got this big candlestick pointing to the downside. It went from 244, 255, all the way to 207. That's about almost $50. I know they were saying, they're like, "Nah, it's okay, it's gonna bounce back." But then we had another candlestick, red candlestick, boom, it dropped all the way to 158. So that's about $100. Most people would have shitted their pants, and they're like, "You know what? I'm about to sell." And you know what I'm saying? And what most people do, they sell, they watch it drop again, they're like, "See, I was right. Thank God I sold." And then bam, they see it rising, like, "Oh, it's okay. It's okay. It's gonna drop back down." And drop down. I'm gonna get it when it drops back down. It drops down, they're like, "You know what? No, I'm gonna wait till it drops back down." And then sometimes they don't even reach those points again. Or if it does, they're like, "Nah, let me wait for it to drop some more." Next thing you know, by the time it's up here or up there, they're still thinking about it. And then it gets back up here in the 200s. And they're like, "You know what? It's getting to the price where I bought before. Let me go ahead and buy." And that's the mistake people do. They panic. They let their emotions control their actions. And you can't do that. You got to have a plan. But anyways, guys, that's what you want to do. You know what I'm saying? If you want to have phenomenal returns, you got to make sure you're getting good price entries. And again, this is none of my price entries. This is just alerts. Uh, I mean, it's up to you. You know, if you want to use some price entries, that's up to you. But anyways, if you really want to know my price entries, follow me on my social media, and I'm doing a deal right now to give you this price entries on a steal. It's a steal, guys. Uh, but anyways, guys, really. But if y'all show me support, y'all subscribe to my channel, y'all give my thumbs up, I'ma just give it out for free. So your support is gonna incentivize me to provide y'all with much more information and a lot of valuable information that could make a positive impact in your life. And all I want is your support. But anyways, guys, that's it for this video. Thank y'all for watching. Thank you for dedicating your time to watching this video. I hope y'all like it. I hope y'all wrote this stuff down. If not, I hope y'all watch it again. And please make sure to subscribe and like my channel. Well, thank you guys. Expect more content from me real soon. And y'all be good. Appreciate y'all.